Good evening, everyone. This is Ryan Mallory for SharePlanner.com. Today is January 17th, 2012. Third week of the new trading year, and so far the bulls seem to have the upper edge, but over the last few days that edge that they've had is showing signs of waning per se. Friday you had a decent sell-off that despite us being down almost 20 points at one point on the S&P, it put in that bottom within the first hour and a half, 2 hours of trading, and then worked itself back up by the end of the day and was only down by 6 or 7 points. So you had the down day on Friday. Not the best candle for a bear. I mean, ideally for the bears, they would have liked to have seen us wipe out, this huge block of trading days here with one trading day to the downside. So that didn't happen. But then today, China has like a good GDP number apparently, and the market, it ratchets it up. It goes up about 12, 13 points, and then the pre-market it starts drifting back downwards. And by the time we open, you can see here on the 5-minute chart, it's really just been a steady sell-off throughout the day. It picked up around 2:30 and did a little bearish flag into the close there, as you can see. So where does that put us at for tomorrow? I'm leaning more to the bearish side, and I mean, I'll be honest, I probably have more of a bearish disposition than anything when trading in the market. So that's something to always be good and aware of, but that doesn't mean that I don't go long all the time. I do so today. I also went long and short today. So this candle here is a bearish candle. You can see here that the market had gains in hand, and it just sold it off perpetually throughout the day. The true candle for the market today can be seen through SPY. You can see here that the market closed lower than where it opened at on the day, so that does put some bearish overtones in the market. Now, you have gaps right here. You have another gap right here from today. We closed about half of it. And then you got some bigger gaps like right here, right here. Well, actually we closed this one, but we have another one back here from late November. So 1, 2, 3 and a half. So, or I guess you could still consider it a full gap. Nonetheless, we started working at filling it today. Like to see it close that tomorrow, and then as well close the gap from, I think it was last Tuesday, where we gapped up real strong on January 10th. So I got into TZA at the close, so I'll work backwards here. There's not a lot of technical analysis that can be done with using TA. I like to go to the underlying asset, so TZ or RUT. We'll look at the Russell 2000, and what I like about it is it's got a little double top, and somebody at Twitter sort of notified that to me before I actually saw it. But I like the action in the S&P, so that was my first reason for getting into TZA. And then also the Russell, which is a lot faster moving index than the S&P, is showing a double top that it can't get through. It had faked it today, but couldn't carry on. So once again, bearish overtones for the market going ahead. That doesn't mean like for weeks and weeks and weeks ahead that's going to be bearish, but I would definitely say that your best bet is to have more of a short bias going into tomorrow. So I got into TZA. I got in at 23.75, closed at 23.85. So we can break that 10-day moving average. It's just something that we have not done since the 19th of December. So going on a full month almost. And typically when you do break that, you get a nice little pop out of the market. You got one here, and you got one here, and as well as here. So that's what I'm looking for, and see what the day holds. Now, a stock that did not go well for me, and basically the reason is obvious. The market just did not have any upside bias from the get. I actually thought that at one point today we were putting in a double bottom. As you can see in the S&P here, early on we had like a little double bottom working here, and it just never came to fruition. But AFFY had a very nice triangle pattern, and it just simply never busted out. It busted out in the early going, but it couldn't hold it. So that was a problem for me on this stock. I ended up selling it at 625, or I'm sorry, 725. Yes, 725. I got in at 735. But the stock just never, the volume wasn't there as it was in the early going, and just little follow through. So when you see that, you just got to get out. So I got in here, got it here on the breakout, goes up to 740, goes sideways for a little bit, and then when it started getting in here, I said to myself, if it drops below 725 or 726, I'm out. It did it. Got out at 725. I'm a better man for it. Saved about 5/7 of a full percent, which is money in my pocket when I can avoid taking extra losses that aren't necessary. And a couple of charts just I thought were interesting. Gold, you got a bullish island reversal right here that I find of particular interest. Typically, when you have a gap down, price action, and then a gap higher, the following day, that's a bullish island reversal. And you also have like what they would call a morning star pattern here, where you have this hammer followed by two equal days on each side of that hammer. So to me, the upside on there's upside GLD. Wouldn't mind trying to get in on a pullback to this hammer here, and then try to see if I could ride it up to like 163, 164 before selling it. Doesn't make for a huge trade unless it can break through this downward trend line that it's been on since early November. But nonetheless, though, it's worth a you get in around 159.50 and you can ride it up to 164.50. That's about a $5 per share on the trade. Not bad. And then there were some other trades in our trading queue today from folks. One was CLNE. Not a bad chart setup. I can see why the person's getting into it, because you got this nice little downward trend. It didn't break through it today, so hopefully for the sake of his trade tomorrow that it can get some upward bias and break through this downward resistance line and push higher. So CLNE looks like a good trade. You can put a stop probably below 1330 and be safe with that. But yeah, very, very well defined trade setup. So props to Coach in our trading room for posting that trade. And then the other one that I found of particular interest was NUGT. Let's see. And this one basically piggybacks, and that's why I did the GLD chart. This one piggybacks off of the gold trade, and you can't see the island reversal in this one, but because this one's tagged to the gold miners. But nonetheless, I would still use gold as my gauge for when to get out and get in on the trade itself. So good trading overall. I finished a shade in the positive. I think I was up like 0.3% today. Not a lot, but I was really busy with the demoing the new chat room, which is coming on really nicely, and I'm extremely excited about launching that here in the next week or two, and if not sooner. Geez, I'd like to launch it tomorrow if that's possible. That I'd be thrilled about that. So so be on the lookout for that, and make sure to participate in our forums and with the reviews that there is. If you got some good experiences with different vendors or bad experiences, let them be known in the in the review section that we have, because it's great for other people to know about those great resources out there. Alright, that's going to do it for now. If you guys have any questions, feel free to stop in the chat room, shoot me an email at ryan@sharepointer.com, and I'd be glad to help. And as always, you all take care of yourselves, and God bless.